Another area that we're seeing fintech firms trying to disrupt traditional finance is in blockchain and cryptocurrencies. Digital currencies, also known as cryptocurrencies, are virtual forms of currency that use cryptography to secure and verify transactions and to control the creation of new units. Digital currencies are more often decentralized but can be centralized and offer a peer-to-peer alternative to traditional fiat currencies. Bitcoin is the first and most well-known cryptocurrency, but there are many others, such as Ethereum, Ripple, and Litecoin. The blockchain technology that underpins cryptocurrencies basically is a distributed ledger, either centralized or decentralized in most cases. In this ledger are records of all transactions and is shared across a network of computers, so that anyone can verify the validity of the transaction. This means that it allows for secure and transparent transactions without the need for intermediaries, such as banks. In the context of FinTech, we see blockchain technology that underpins these cryptocurrencies being applied in other areas, such as supply chain management, trade finance, and digital identity verification. The next category of fintech companies we see out there are the ones involved in insurance technology, also known as InsurTech. These companies use technology to transform the insurance industry, including the development of new products, the automation of underwriting and claims processes, and the use of data to better understand and manage their risk. InsurTech companies use advanced technologies such as big data analytics, artificial intelligence, and the Internet of Things to automate and simplify the insurance value chain, from underwriting and risk assessment to claims management and customer engagement. This allows insurers to offer more personalized and flexible insurance solutions to customers, while also reducing costs and improving the overall customer experience. Some examples of InsurTech innovations recently include online insurance platforms that allow customers to compare and purchase insurance policies, telematics-based auto insurance that uses data from a connected vehicle to determine the driver's risk profile, and usage-based insurance that charges customers based on their actual usage of a product or service. Unsurprisingly, InsurTech is having a significant impact on the insurance industry, helping to drive efficiency, reduce costs, and improve the customer experience. It is also helping to address some of the challenges faced by the insurance industry, such as the need to adapt to greater customer needs and expectations, the increasing importance of data and analytics, and the need for greater transparency and trust. And speaking of real-time data and analytics, that's the next sector of the fintech industry I'd like to talk about. The use of technology to process and analyze large amounts of financial data in real time enables businesses and individuals to make informed decisions based on the latest financial information. And that helps to improve the efficiency, speed, and more importantly, accuracy of their decisions. Real-time data and analytics in fintech can be used for a wide range of financial applications, including reporting, risk management, fraud detection, and customer insights. However, we can also see applications outside of finance, such as insurance, as we talked about earlier, or customer service and logistics. This technology is typically powered by cloud computing and machine learning algorithms. The use of real-time data and analytics in fintech is helping to drive innovation and competition in the financial services industry, helping businesses to make more informed decisions. Another area of fintech involves companies that work in artificial intelligence and machine learning. The use of artificial intelligence and machine learning helps automate tasks, improve operational efficiency, and provide real-time data-driven insights for businesses and individuals. AI, or artificial intelligence, refers to the development of computer systems that can perform tasks that typically required human intelligence, such as recognizing patterns, making predictions, and learning from previous experience. Machine learning is a subset of AI that involves the use of algorithms and statistical models to enable systems to automatically improve their performance on a specific task over time. In FinTech, AI and machine learning are both being used to drive innovation by increasing the efficiency and effectiveness of financial services, such as risk management, fraud detection, even customer service, and investment management. For example, companies are using AI and machine learning to analyze large amounts of financial data to identify patterns and anomalies, helping to detect fraud more quickly and accurately. They can also be used to automate tasks such as customer service and account management, helping businesses to improve their efficiency and reduce costs. In addition, AI and machine learning are also being used in investment management to help investors make more informed decisions based on data-driven insights, as well as automating many facets of investment management. AI and machine learning can analyze market trends, backtest historical performance, help refine investment models, and evaluate investment opportunities. On the other side of the coin, we have an area of FinTech which specializes in helping financial services companies meet their regulatory requirements. These companies are called RegTech firms, short for regulatory technology. And in the recent years after the global financial crisis, we've seen the financial services industry subject to a growing number of regulations aimed at improving the stability and the security of the overall financial system. RegTech companies provide solutions to help these businesses comply with financial regulations, reduce operational risks, and improve the efficiency and accuracy of the reporting that they need to provide to their regulators. It's important to make the distinction that when we talk about RegTech, we're not talking about the regulators themselves, but rather third parties that use technology and software to help banks, financial institutions, and other companies stay compliant with regulations or to maintain best practices. So as a simple example, some of you might receive anti-phishing training at work. This training normally takes the form of emails going to your company email that attempt to deceive you into clicking on a link or downloading a malicious software download. And if you make an error, it enrolls you in training so that you don't make the same mistake twice. Now, this is an example of a RegTech solution. Some other common examples of RegTech solutions include anti-money laundering monitoring, so that account activities in banks are monitored for suspicious activity. There could be KYC, Know Your Client solutions, which automate the process of verifying the identity of customers whenever a new account at a bank is opened, and comparing it to a database of known criminals, for example, and flag if there's a match. There's also risk management solutions, which use technology to analyze data and assess risk levels, helping businesses make informed decisions and reduce the likelihood of operational failures. There's also regulatory reporting solutions, which automate the process of providing reports to regulators and ensuring that a company stays in compliance. Speaking of compliance, there's also compliance management solutions, which automate the process of monitoring and enforcing internal compliance as well as external compliance. Overall, RegTech is playing an increasingly important role in the financial services industry, helping businesses because of increased regulatory requirements as well as potential threats to the overall stability and security of the company. Hopefully, going through this section on the subcategories of FinTech use cases has given you a greater appreciation of the impact that financial technology has on traditional financial institutions, whether it be through increased competition, a better overall customer experience, or the use of data and analytics. However, many of these traditional financial institutions are choosing to keep up with FinTech innovation by either taking a collaborative approach, say partnering with FinTech startups, or acquiring them outright. For example, JP Morgan Chase has acquired FinTech startups like WePay and OnDeck, while banks like BBVA have invested in robo-advisors like Future Advisor.